Hello, good morning and welcome to Business 360. In Business 360 this morning, a part of the conversation will center around BRICS nation and the exploration of digital currency, which is linked to crush dollar. Welcome, my name is Blyden Lukem. We begin from there. India has proposed that BRICS nations explore linking the official digital currencies to simplify cross-border trade and tourism payment, a move that could gradually reduce reliance on the US dollar as geopolitical tensions intensify. India's central bank has proposed linking BRICS digital currencies to simplify trade and tourism payments. The plan could be tabled at the 2026 BRICS Summit, which India is set to host. The proposal builds on earlier BRICS commitment to payment system interoperability. Still in Africa, Nigeria has emerged as the largest single beneficiary of China's Belt and Road Initiative (BRI) in 2025, following an estimated $24.6 billion construction commitment linked to the Ogiriben Gas Revolution Industrial Park (GRIP) in Delta State, marking one of the biggest China-backed infrastructure deals in Africa this year. GRIP Group aims to harness Nigeria's vast natural gas reserves for high-value products, contributing to industrialization and economic development. This initiative highlights China's shift towards significant energy-related infrastructure projects in Africa, aligning with strategic and commercial goals. Initial progress faced challenges due to security issues in the Niger Delta region, delaying development and affecting investor confidence. Still in Nigeria, petrol importation remained the dominant source of fuel consumed in Nigeria in 2025, accounting for 62.47% of the country's total premium motor spirit consumption, according to reports. This trend persisted despite the commencement of operations, steady ramp-up in production and distribution of petrol by domestic refineries, notably the Dangote Petroleum Refinery, alongside state-owned refineries and several modular facilities, as revealed in the latest midstream and downstream sector of fact sheet released by the Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA. According to the newly released fact sheets, total national petrol consumption by Nigerians stood at approximately 18.97 billion liters in 2025, with oil marketing companies accounting for 11.85 billion liters through imports, highlighting the market's continued dependence on foreign supply. This means that nearly two-thirds of petrol consumed by Nigerians in 2025 was sourced from imports, while domestic refineries contributed about 7.54 billion liters, representing 37.53% of total consumption, the regulator stated. These totals were derived by applying the daily average consumption to the number of days in each month. The data, which are based on volumes trucked into the domestic market, underscore Nigeria's continued dependence on fuel imports, even as the Dangote refinery, currently the country's only operational large-scale refinery, ramped up supply during the year. Meanwhile, the volume of petrol imports is expected to decline significantly in 2026 if the federal government proceeds with the planned implementation of a 15% import tariff on premium motor spirit, slated to take effect in the first quarter of 2025, in line with a policy memo approved by the President Bola Tinubu. For decades, Nigeria, Africa's largest crude oil producer, relied almost entirely on imported petrol, following prolonged underperformance of its state-owned refineries in Port Harcourt, Warri, and Kaduna. This dependence deepened after the refineries became largely dormant, forcing the country to meet domestic demand through imports financed with scarce foreign exchange and for years supported by a costly petrol subsidy regime. Still in the oil sector, the Dangote Group has signed a $350 million deal with Indian engineering firm EIL to expand its flagship refinery and petrochemical complex in Lagos, a move set to boost Nigeria's industrial capacity and reduce Africa's reliance on imported refined fuels. The project aims to increase the refinery's capacity from 650,000 to 1.4 million barrels per day, placing it among the largest single-location refinery complexes globally. The Dangote refinery, located in the Lekki Free Zone, signifies a milestone for Nigeria as it transitions from fuel import reliance to becoming a producer and exporter of refined products. Additional petrochemical expansion includes significantly boosting a polypropylene production to 2.4 million tons per annum. Meanwhile, the federal government plans to expend about 206.5 billion naira on poverty alleviation-related projects in 2026 budget, an amount that represents far below 1% of a total of 58.47 trillion naira spending proposal submitted to the National Assembly. A review of project-level data from the 2026 Appropriation Bill shows that all items directed and directly tagged to poverty alleviation across ministries, departments and agencies, as well as the service-wide votes, add up to 206.5 billion naira. When measured against a proposed total budget of 58.47 trillion naira, this translates to about 0.35% of overall federal spending for the year. When compared with a capital budget of 23.21 trillion naira, the poverty-related envelope represents roughly 0.89%. The bulk of this allocation comes from the service-wide votes, where two major recurrent provision under the National Poverty Reduction with Growth Strategy dominates the figures. The first is the National Poverty Reduction with Growth Strategy under FGN commitment, including NSIP and SEP upscaling, with a provision of 100 billion naira, while the second is the NPRG's recurrent allocation of another 100 billion naira. Together, they account for 200 billion naira, which is over 96% of the entire poverty alleviation envelope for 2026. This means that without the service-wide votes entries, all MDS combined account for only 6.5 billion naira in poverty-related projects. The Border Communities Development Agency headquarters records 63 million naira across two projects targeted at the Zamfara North Senatorial District. These include 28 million naira for poverty alleviation and empowerment for women in Zamfara North and 35 million naira for poverty alleviation and empowerment in the same district. These are geographically focused interventions that make up a small fraction of overall allocation. Meanwhile, as here from a Nigerian point of view, the Executive Secretary of the National Sugar Development Council, NSDC, Kama Bakrin, said Nigeria is on its way to self-sufficiency in domestic sugar production. Bakrin, in an interview, said stakeholder response to its recently launched Sugarcane Outgrower Development Program, SODP, is practical for the growth of the country's sugar industry. According to him, the strong interest in the program signaled growing confidence in efforts to boost local sugar production. He explained that the SODP integrates farmers into Nigeria's sugar value chain through guaranteed offtake arrangement, access to quality seed cane, inputs, and technical support. And now to the banking sector. Nigeria's banking sector is in the midst of one of its most transformative periods in decades. In March 2024, the Central Bank of Nigeria, CBN, announced a new minimum capital requirement for banks, prompting them to raise additional capital by 31st March 2026. The goal is to create larger, more resilient banks that can support big projects, strengthen the financial system, and help drive Nigeria towards a $1 trillion economy. The new capital requirement is at different levels: international, national, and regional. Banks that have secured international licenses. Let's look at these banks. An international banking license allows banks to operate beyond Nigeria's borders and engage in cross-border transactions. To qualify, banks must meet a higher capital threshold of 500 billion naira in paid-up capital. As of early 2026, the following banks met the requirement and secured their international licenses: Access Bank PLC, Fidelity Bank PLC, First Bank of Nigeria Limited, Guarantee Trust Bank, that's GT Bank for short, United Bank for Africa, UBA, Zenith Bank, PLC. Let's look at the banks that have secured national licenses. A national banking license allows operations across Nigeria but restricts international expansion. Banks need 200 billion naira in paid-up capital to secure this license. The banks. First City Monument Bank, FCMB, currently pushing to raise additional capital to secure its international license. Wema Bank, Standard Chartered Bank, Nigeria, Citibank, Nigeria, Stanbic IBTC Bank, Sterling Bank, Globus Bank, and Premium Trust Banks. These are the banks that have secured their licenses for 2026, hoping to meet, not hoping, they've met the deadline. The deadline for the recapitalization of the bank is on the 31st of March 2026. And now we'll go on a quick break, and when we're back, Business 360 continues, looking at global economic standings around the world and the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Platinum Kim. And now to global economic standings and the markets. First, starting from China's fourth quarter GDP growth eases. Annual price holds at 5%. China's economy grew 4.5% year-on-year in the fourth quarter of 2025, a slowing from 4.8% in the third quarter, and marking the weakest rise in 3 years due to weak domestic demand, even as consumer subsidies remain in place. Full-year growth stood at 5% in line with Beijing's targets and 2024's pace. The pace in 2024 supported by a record trade surplus, as strong exports to non-US markets helped offset US tariff pressure. And now to the markets as oil falls amid easing tensions in Iran. WTI crude oil futures fell to $59 per barrel today after recording a full weekly gain, as cooling tensions in Iran alleviated concerns over potential supply disruption. Market anxiety surrounding Iran calmed after President Trump signaled last week that he may delay any military action following Iran's pledge not to execute protesters. However, Trump warned that strong measures could still be taken if execution resumed, keeping some geopolitical risks premium in the market. Meanwhile, traders are assessing the potential impact of renewed trade tensions on energy demands. Oil prices have also been pressured by expectations of supply surplus. Still, supply constraints remain in certain regions, with Kazakh's exports facing troubles due to disruption in the Black Sea. And now to the energy markets. The energy market first. Afterwards, we'll look at the state of agricultural market and even metal market, the energy market this morning. And while anticipating the market, let's keep talking about the commodity market first, and then afterwards look at the markets together. And now to gold prices. Gold hits a record high. Let's begin the market next in that direction. Gold prices rose more than 1% to above $4,670 per ounce today, reaching a record high as investors flocked to safe haven assets following President Trump's announcement of new tariff on European countries. On Saturday, Trump said he would impose a 10% tariff on goods from 8 European nations starting February 1st due to opposition to American control over Greenland. The rates could rise to 25% in June if no agreement is reached on what he noted as the complete and total purchase of Greenland. The announcement sparked concerns across Europe, with European leaders expected to hold an emergency meeting in the coming days to discuss possible retaliatory measures, including levies on 93 billion euros worth of US goods. Gold has continued to rise strongly this year after a solid performance in 2025, aided by safe-haven flows amid geopolitical tensions in Venezuela and Iran, alongside renewed concerns over the Federal Reserve's independence. And now back to the market. First would be the metal market, and afterwards the energy market and the agricultural market. The metal market indicates the price of gold at $4,667 per ounce, upward by 72 points, a 1.59% appreciation. A silver price also gaining 3.52%, copper price upward 0.42%, steel price falling by 21 points at 3,117 Chinese yuan per ton is the price of steel. And now to the energy markets. Energy commodities indicates the price of U.S. crude, the West Texas Intermediate crude, WTI crude, at $58 per barrel, a downward 0.66 point, a negative 1.11% decline. Brent, which represents Nigeria's price benchmark, a price level stands at $63 per barrel, a downward 0.79 point, a negative 1.23%. Natural gas gaining 10.46%, and gasoline falling negative 0.58%, hitting oil coal a little here, a little there. And now to the agricultural market. Agricultural market begins with a price of soybeans at $1,056 per bushel, a soybean falling by 1.7 point, a negative 0.16%, a wheat price at $518 per bushel, upward 0.46 point, a lumber falling a negative 0.16%, and the price of palm oil stands at 4,073 Malaysian ringgit per ton, gaining 2 points in the morning market. And now to the FX market. Looking at FX update, a Swiss franc appreciates by 0.56%. Top currency gainers are Swiss franc 0.56%, a New Zealand dollar 0.43%, the euro 0.32%, Japanese yen 0.21%, and British pound 0.13% appreciation. The biggest losers in the market this morning is the dollar index, a negative 0.29% decline. And now to follow the market, the Euro-USD market, and afterwards the state of the Naira and the cryptocurrency market. The Euro-USD market. Euro-USD price level indicates a standing on that many would have different concerns for. Well, a little here, a little there for some of these commodities, and what the anticipation would be some of the currencies at 1.162 US dollar equaling 1 euro. The euro gaining 0.21% appreciation against the dollar. The pound against the US dollar, the pound gaining 0.14 points, a percent rather, over the dollar, and the Australian dollar also gaining over the US dollar. The US dollar struggling a bit. Let's look at the state of the Naira. The US dollar against the Naira. 1,420 Naira equaling 1 US dollar. The dollar gaining 1.73 point over the Naira, 0.12% appreciation. And the euro at 1,651 Naira equaling 1 euro. The euro gaining 5 points over the Naira. The pound also gaining 6 points over the Naira at 1,904 Naira equaling 1 pound. The cryptocurrency market this morning. Crypto market indicates the price of Bitcoin at 92,939 US dollar, a Bitcoin falling a 683 point, a negative 0.73%. Ether, on the other hand, dropping 75 points at 3,205 US dollar for 1 Ether. And Binance also falling. It seemed to be a negative market momentum for the crypto market this morning. And now to the equity market as we set to close as European market head lower on tariff drift. European equity market was set to open sharply lower today after US President Donald Trump threatened new tariff on 8 European nations in a bid to force the purchase of Greenland. Multiplicity of conversation indicates that NATO members opposing the plan, namely Denmark, Norway, Sweden, Finland, Germany, the UK, France, and Netherlands, face a potential 10% tariff from February 1st, rising to 25% in June unless an agreement is reached. European leaders discussed possible retaliatory measures, including reviving last year's plan to impose tariff on U.S. goods, while French President Emmanuel Macron reportedly urged activation of the EU's anti-coercion instruments. In pre-market trade, Euro Stock 50 and Stock 600 futures fell 1.3% and 1% respectively. And now to the African stock market. African stocks would come with different perspective. First would be the Nigerian stock market, the NSE All Share, a price level being 166,151 index points, gaining 22 basis points this morning, a 0.01% appreciation for the Nigerian stock market this morning. Meanwhile, South African stocks seem to be on the negative, SA All dropping a negative 0.37%, SA 40 also dropping negative 0.33%, Egyptian stocks, EGX 30, are gaining 818 basis points, a 1.85% appreciation. And now to the Nigerian stock market, casting a mind back to the last 7 days. Last week, what really happened? Let's look at NJ's sector trend in the last 7 days. And afterwards, we'll also look at the top gainers in the last 7 days and the bottom losers in the last 7 days. What the market trend has been for Nigeria. First, a Nigerian stock market had gained 1.55% in the last 7 years, but according to the statistical draw that we've seen, real estate gained the most, 16.98%. Healthcare also gained, following 11.97%. The tech sector, telecom sector, financial sector, utilities, consumer, discretionary also gaining in that direction. Just a few losers in the market. And now let's look at the top gainers in the last 7 days. The top gainers in the last 7 days in the Nigerian stock market. MTN Nigeria Communications at a price level of 580 naira per share gained the most, 5.5% in the last 7 days, adding a whooping 629.1 billion naira to the market value. Well, First Holding, which is the parent company of First Bank Nigeria, also gaining 7.2% in terms of holdings, and on and on. Nestle Nigeria also gaining at number 3, and Zenith Bank at number 4, Jazz Bank at number 4, number 5 in the top gainers. And let's conclude with the top losers in the last 7 days. The top losers in the Nigerian stock market in the last 7 days. Lafarge Africa, WAPCO, gaining the most at a price, losing the most rather at a price level of 157 naira per share, dropping 1.2% decline it is, losing a whooping 30.6 billion naira in its market share. Guarantee Trust Holding also losing, NASCON losing, Access Corp, Access Holding losing, and Ikeja Hotel losing, indicating the top losers in the Nigerian market last week. Well, the bulk of the market has been looked upon from the commodities rather to the financial market and the stock market, and the direction this could give a pointer to what could happen this week in the market and the world of business. And here we draw the curtain in today's edition of Business 360. Thank you for being a part of it. My name is Blyden Ukem, and thank you for watching.